Well, good afternoon, everybody. We are certainly living in some unprecedented and some crazy times right now. And I want to welcome you to the Keystone Financial Group webinar. I think we got a really good topic that a lot of people are focused on, and there's a lot of confusion. And we're going to talk today about the economic impact payments. And we're also going to talk a little bit about the CARES Act and what that is specifically, how it impacts retirement plans. There's a lot to that, but we're just going to take one portion of that today. There's a lot of different talk on this stimulus, and people are confused about it. People have questions about it, and the reality of it, this is actually changing day to day. There's different pieces of this that have actually were one way one day, and then literally a couple of days later it changed, and so people are just confused. And so we wanted to take a few minutes and just talk to you a little bit about what this is, the impact of it, and how this should impact you. Before we start, I want to first just say I hope everybody on this is doing well. I hope everybody is safe. I know this has had a profound impact on all of us, and it has shook a lot of us up in ways that we just didn't see happening at all. So I first want to wish you well. Hope you are doing well, and I hope you are able to get some good information from this today. So let's talk a little bit about the stimulus. And so the Treasury Department and the Internal Revenue Service announced that there's going to be a distribution of economic impact payments, and hopefully these are going to be received sometime in mid-April. Again, we'll see if that happens, but that is the plan, to have these distributed sometime midway through this month. These are supposed to be distributed automatically, and hopefully there's not going to be any action required for most people. However, some taxpayers who typically do not file returns, they may need to submit a simple tax return, but even that has changed from day to day. We're going to give you some information that we have gotten to date, where the sources that we have this is the most updated information. Before I get into the questions and answers of what this specifically is, let me talk a little bit about what actually is the stimulus. It's actually a tax credit. And what this is the stimulus checks are technically an advance of special tax credit for the 2020 tax year. Some tax credits reduce your overall tax bill. The more credits you claim, the less in taxes you owe. But then there's other tax credits, such as the earned income tax credit, that are refundable, meaning that if you don't owe any federal income taxes, the government sends you a check for the credit. And in essence, they're payments from the government delivered through the Internal Revenue System. Now, the stimulus payment is a unique, fully refundable tax credit. And even if you don't owe a federal tax, you're going to, yes, sir.
Hey, sorry to interrupt the call, guys. Hey, this is Ryan. Your slides aren't moving. I just see the main slide still.
I haven't moved yet. That's why.
Okay. Sorry, guys.
Yep. Nope. You're good. So that was Ryan Fleming. This is Brian Manier. I should have introduced us both. We're going to be taking you through this. And so again, what I was saying was the stimulus payment is a unique, fully refundable credit. So even though this is not necessarily an income payment, what this is it's basically a tax refund or income tax credit that we're getting a year early is how this works. And so what we're going to do is take you through some questions that people have, and we're going to answer those questions for you. So I'm going to go ahead and flip to the first slide. Ryan, can you see that? Is that one come up?
Yeah, I did. Sorry, man.
Okay. No worries.
Looks great.
No worries. Just wanted to introduce what this was before we get into it. So let's get into some of the Q&A, some of the questions that people actually have. So the first one is, who is eligible for this economic impact payment? So number one, any tax filers with an adjusted gross income up to $75,000, and this is for individuals, and up to $150,000 for married couples filing joint returns, they're going to receive a full payment. For filers with income above these amounts, the payment amount is going to be reduced $5 for each $100 above the $75,000 and $150,000 thresholds. So single filers with income exceeding $99,000 and $198,000 for joint filers, and they don't have any children, they're not going to be eligible for this payment. Social Security recipients and railroad retirees and otherwise not required to file a tax return are also eligible and not be required to file a return. Now, this was something that was up for debate. Where I think they've landed on this, and the most updated information that I have right now is saying they will not be able, or they will not need to file a return on this. And then in additional to that, eligible taxpayers who file tax returns either for 2019 or 2018, so if you haven't filed your 2019 tax return yet, they'll go off of 2018, automatically receive an economic impact payment up to $1,200 for individuals or $2,400 for married couples, and then up to $500 for each qualifying child. Now, what that means is for a dependent that's under the age of 17. For whatever reason, the IRS looks at if you're 17, you're not a qualifying child. So if you're under 17, and that would be a qualifying child, that there would be $500 for each additional child. The next question that we're hearing is, how will the IRS know where to send my payments? The vast majority of people, they're not going to need to take any action, which is that's a good thing. So the IRS, they're going to calculate, they're automatically going to send these economic payments to those who are eligible. For people who have already filed their 2019 tax returns, the IRS is actually going to use this information to calculate that payment amount. And for those who have not filed their return for 2019, the IRS is going to use their 2018 tax filing to calculate that payment. And the economic payment will be deposited directly into the same banking account reflected on the return filed. Okay, so if they have that information on file, then you should be good to go. That should automatically go into your account where you don't need to take any action. So what if the IRS, what if they don't have the direct deposit information? What can you do about that? So in the upcoming weeks, what the Treasury is going to do is they're going to develop a web-based portal for individuals to provide their banking information to the IRS online. Individuals can also receive payments immediately as opposed to checks in the mail. Okay, so if that's something that they don't have that on file, pay attention to the information that they're going to be broadcasting, because then you'll be able to put that information in that web-based portal. Okay. What if you're typically not required to file a tax return? Can you still receive your payment? And the answer to that is yes. The IRS will use the information on the form SSA 1099 or form RRB 1099 to generate economic income impact payments to recipients of benefits reflected on these forms who are not required to file a tax return. So since the IRS would not have information regarding any dependents for these people, each person would receive $1,200 per person without the additional amount for any dependents at that time. Okay? What about if I have a tax filing obligation but have not filed my tax return for 2018 or 19? Can I still receive one of these payments? And the answer to that is yes. The IRS does urge anyone with a tax filing obligation who has not yet filed a tax return in either one of these years to file as soon as they can receive an economic payment. And taxpayers should include direct deposit banking information on that return. Okay? I need to file a tax return. How long are the economic payments available? For those concerned about visiting a tax professional or local community organization, these payments will be available through the rest of 2020. So you just want to make sure that you try to get that done as soon as possible. And then here's some information, a couple websites that we have here if you need to get some more information. What the IRS is going to do is they're going to keep posting updated information on the two websites that you see there. So hopefully this gave you a little bit of information to understand what the stimulus is, answered some of your questions up front, and hopefully this just gives you a better idea. And what I would recommend that you do is go to these websites either daily or every other day, just to make sure that you're understanding how this is updated, because we have seen already that this is already changed from day to day. And you might have some other questions that we didn't cover in today's webinar, and those will be able to get answered for you as well. So what we're going to do now is we're going to shift to the CARES Act. Ryan's going to talk a little bit about what that looks like specifically in regards to retirement plans. So Ryan, I will let you take that away and tell us a little bit about what's going on with retirement plans in the CARES Act.
Absolutely. Great job, Brian. Good information. Hello to everybody. And I'd like to also wish my well wishes on your family. And thank you for your time today. We think it's important that we communicate and keep everybody in the loop. So the CARES Act is something that's recently been put out, a lot of different topics associated with this CARE Act. We're going to focus on one of those today regarding retirement plan distributions. So some of you may have heard this, but a lot of people don't really realize that you're allowed to take a hardship withdrawal up to $100,000 from your 401ks, your 403bs, and or IRAs. And you can avoid the 10% penalty that's typically levied before 59 and a half years old. And some of you may have already taken loans prior to this CARES Act. So this rule is retroactive back to January 1st of this year. So if you've taken a loan from your 401k, then you will not be subject to this penalty, which is kind of nice. So the option that they're giving you is to spread out these taxes. It's a retirement plan, and so even though they're being generous with allowing people to get some access to these funds, we still have to pay the tax. So you're allowed to spread out the taxable event over 3 years, which is nice, but also they do allow us within that 3 years to recontribute and therefore avoid some or all of the taxes, which is a really interesting point. So hopefully that makes sense there, and it got my mind stirring a little bit, and we found that there's a couple ways to qualify for this distribution opportunity. One is if you or your spouse has been diagnosed with COVID-19, that would obviously count as a hardship. Or if you've suffered like a financial consequences as a result of this pandemic. So if you've had reduced income, if you've been furloughed, I've had several clients call and say they've been put on 3 months of furlough. Maybe you are having your hours reduced, or maybe you're just unable to work. You're healthy, but you can't work because of childcare needs and the fact that they're not open. You need to be there for your children and therefore not making money. So those are the two ways that they would classify that as a hardship opportunity. And the reality is, though, is not every 401k or 403b plan administrators are required to allow these hardship withdrawals. So they may have specific rules that require you to exhaust other sources first. You know, for example, they may make you take a loan before they let you do a withdrawal. And it's just important that you check with your human resource, you check with your plan administrators to make sure you're 100% comfortable with their protocol on qualifying for this, but also how to exhaust those via withdrawals or what their steps are. Now, an interesting thing is up until this, we all were allowed to take a max loan from a 401k up to $50,000, or 50% of the account. Well, now they've doubled that up to a max of $100,000 or 100% of the account. And it's important to know that loans are tax-free. And so, in the event of a job loss, if you've had a loan in the past, then and you weren't able to pay that back, that would be treated like a withdrawal, and you and I would be on the hook for taxes. So that's an interesting thing. Is should I take a withdrawal or should I take a loan? They have doubled the loans, but your administrator may require certain steps before you can just do the straight out withdrawal. I guess we we know on this call that everybody's situation is different. And really what the takeaway I wanted to get to us today is talk to somebody that's a trusted source. If you have a different situation than your neighbor, then this isn't a blanket approach. For example, if you are able to take a withdrawal, then you need to understand that taking money from an account in a down market like we're in right now may be a long-term risk to how much money you're going to have in the future. This is something that we teach our clients. It's called sequence risk or sequence of return risk. Markets are down, not very wise to take money out in a down market. So therefore, that's something you have to think through instead of being emotional and reactive during these times. Some other options I think that are prevalent that we need to be thinking about is that if you need short-term cash needs during this uncertain time, maybe look to emergency funds first, cash, savings, money markets, home equity lines of credit, HELOCs here. Those might be a way to be a catch-all during these short-term cash flow crunches. Some of you have HELOCs and just haven't utilized them, but they're available to you. And that would be a great safety net before maybe taking money out of your 401k. Or some of you have cash value life insurance contracts that have liquid tax-free monies that you could loan or borrow from. We teach this a lot here, and it comes in handy during times like this. Liquidity is important. I would say try to exhaust most all other options if you can before you just dip into your retirement. We all know that when you take that money out, it's not working for you anymore. And if you're not going to be able to pay that back, it may be important for you to look at other sources first. And with so many things going on in our world, so much uncertainty, and these new rules that are coming out, it seems like weekly or monthly, and there's going to be more to come, gang. It's just important more than ever to talk to a trusted source. And we are thankful to be here for many of you to help you work through these things, to be a thought partner with you. That this is a time to be proactive, not reactive, and having a good team in your corner that can advise you can make all the difference in the world. So, Brian, that's just what I wanted to press upon into the group today. I know it's a lot in a short amount of time. I think we're recording this, but we're here. And so, guys, thanks for your time. I'll pass it back to Brian.
Yeah, guys, this is a lot of important information. We went through it fairly quickly, but there's a lot of information out there as it pertains specifically with the CARES Act. And Ryan did a really good job of summarizing. If you're in a pinch and you need some money right away, and typically it would have been a lot harder to access those either IRA dollars or qualified money, and we're getting a little bit of a break on accessing those in a difficult time. Now, as he indicated, you may be better off trying to go to other sources if possible, but it's important to understand if you're in this time of need and you need to get to it, knowing what you can and can't do. And even if you don't remember everything that we talked about today, what we would ask you, or we would encourage you, is to give us a call and we can help walk you through that. There's a lot of things from the CARE Act, whether it's the stimulus checks or whether it's the required minimum distribution that's been suspended, or whether you're looking at qualified charitable distributions, whether you're looking at
even college planning, Brian, even college planning. Yep.
Yeah, that's exactly right. If you're a business owner and you're listening to this, and hopefully you went out and we sent an email on this to our clients this week, but we talked about the Paycheck Protection Program. Hope you had the ability to do that. You can still apply for that. You're just going to be a little bit later in the queue, and there's actually going to be a second wave for this for nonprofits and even self-employed individuals. So you just want to make sure that anything that you can take advantage of, you want to make sure that you're able to go out and get that. And as Ryan said, give us a shout right now. If you're just unsure of what this looks like for you, the information is on your screen there. Reach out to Rose. She will schedule you with one of us, and we can talk through that with you. We are here to help. We want to make sure that you are able to be directed into the proper place that's going to have an impact on you. And so we know we're all kind of dealing with it. We're all dealing with this in a way that we never saw coming. So, reach out to us. We're here to help in any way that we can. So we want to wish you guys well. We know this is really difficult, and there's a lot of information here. Again, we're not expecting you to remember it. So give us a call. We want to talk to you. We want to hear how you're doing, and hopefully you guys are well. Thank you for taking a few minutes of your time today and being a part of this. We're going to keep trying to do these every week in the short term, and so we look forward to talking to you guys soon. Best wishes to you today and the upcoming week.
Stay safe, everybody. Thank you.